What's good, everyone? Max here, Wealthier by the Day, day 19. I have one topic I am going to cover. It's going to be about compound interest and the importance of compound interest and really how important it is to have a strong grasp or understanding of what compound interest is and how it can pretty much make or break you financially when it comes to investing. So stay tuned for that. Please like, comment, subscribe. I'm not a financial professional. This is for entertainment purposes only. Let's get into it. So compound interest is what some would call like the snowball effect, where it's like slowly over time as you gather more and more principal, you increase your principal over the course of many years, and you have a steady ROI, rate of return on your investment, that your pretty much your investment account portfolio will exponentially increase in value over time due to the nature of returns and the nature of compound interest. And the best example I can always use is what is 10% of one, or let's first off, let's say you have an ROI of 10%. And that's historically what the S&P 500 has returned over the course of the last approximately 100 years. And that's pre-inflation. That's your return before inflation. It's not your real ROI. That's before inflation and taxes and all that. But let's say 10% is what we're looking at. Let's say we're assuming a 10% rate of return. So let's say the first year you have $1,000 in that portfolio, you return 10%. So how much money did you just make? You made $100, which $100 isn't much. That's enough to make a kid excited, right? That's a start. That's not the goal. Okay, so in a few years you have $10,000 and you return 10%. Well, what's 10% of $10,000? Well, it's $1,000. Okay, that's pretty cool. That's not bad. Not bad. Okay, it's been a few more years. You're at $100,000 portfolio value. Now you return 10% and it's $10,000. That's something to get excited about, in my opinion. $10,000, that's not bad. That now we're talking about some real concrete numbers. That's enough to move the needle, and that's enough to get pretty excited about. Okay, so $10,000. Okay, you've made it to, let's say, $500,000 portfolio value. You get 10%. Now you're at, excuse me, $50,000. Now, $50,000, that's no joke. I gotta check my mic real quick. That's no joke. Like $50,000, that's like as much money as some people make in a year, right? Like, and of course that's before tax and all that. And I guess it depends on. I guess it depends on whether you're gonna pay taxes on that money, whether it's a Roth account, all that. But let's say like that's $50,000. That'll move the needle, and that's where you start getting into real snowball territory, real compounding territory, where like you're starting, you don't need nearly as much principal investment to move the needle because your snowball's already so big. So okay, we're at $500,000. A few years go by, you're at $1 million portfolio value. What's 10% of $1 million? That's $100,000. Now we're getting into like, okay, this is unreal. I just made $100,000 in a year on my portfolio, and you're probably still earning income on top of my income, which $100,000, like that's a lot. Even in a few years, that's going to be a considerable amount of money, right? Okay, let's go down the line even further. Let's say, you're at $1.5 million a few years down from there. Now that's $150,000. Now you can keep playing that game. I wanted to get to that point because that's where things start getting pretty ridiculous. $2 million, $200,000, $5 million, $500,000, right? $10 million. You just made $1 million in returns just because you have, $10 million in the market. That is how the rich get richer. Wealth begets wealth. If you have $10 million, it's going to be super easy to multiply into more millions of dollars. If you have $1,000, it's going to be very challenging. It's just a matter of getting to the point where that snowball effect starts making a substantial difference. And I would say realistically, that happens around like 500,000 to $1.5 million. That's where you're actually going to see things that are pretty unreal for the average person, for the average investor. Obviously, not for someone that has like, you know, tons of generational wealth. Like that's, you're going to be desensitized to smaller amounts of money. But like if you can get up to like a $1 million portfolio value and not eat away at your principal or your gains yet, and keep pumping income into that portfolio and let that thing grow, even if you're not putting a ton of money back into it, like just let compound interest do its thing. That's what you need to shoot for. So the question is, I mean, how fast can you get to $1 million? What's realistic? For a lot of people, $1 million, it's going to take you a super long time, decades, to get to $1 million. I am not close. I'm not close. I'm not super far away. Probably not as far as some people, but I'm not close. I have many, many years of investing left in me. I like the $20,000 a year investing kind of deal. So like, let's say $20,000 a year, 10 years, you're at $200,000 of, that's just your principal, right? Like, and your returns aren't going to be that great. I mean, let's say at least 20 to 25 years to get to $1 million for most people if you're investing like $20,000 a year. That's a long time. So again, this goes into having like long-term perspective and continuing to build out your investment portfolio over time, knowing that the goal is to get to a substantial amount of money like that, a big figure. That way you can utilize compound interest. The hard part is just getting to the point where you can really utilize compound interest. It takes patience and it takes a lot of time. Obviously, if you can find a way to increase your principal investment sooner and faster, then you'll basically reap the benefits of compound interest with larger sums of money much earlier. But again, how do you increase your income enough to be generating hundreds of thousands of dollars a year so you can invest it into your investment portfolio? I mean, that's probably going to require owning your own business or having an income-based job with a company and then having more money coming in from the side somewhere else. Like, that's up for you to figure out. And that's the game everyone's playing, or at least that's the game I'm playing, rather than trying to figure out how to become, which, I mean, sure, I invest in individual stocks and I play that game, but rather than focusing solely on how can I be Warren Buffett, which Warren Buffett became Warren Buffett back a long time ago when there was more mispricing in the market, according to Warren and Charlie Munger. Like, the markets were not nearly as efficient as they are now, maybe because data was less readily available. The markets themselves were a bit more primitive. There was a ton of value companies out there that you could buy and basically do a hostile takeover and liquidate the company and pull the money out of the company. Like, there was a ton of stuff you could do. Anyways, and that's just not really the case now. So rather than trying to be Mr. Profitable individual stock picker, which I do, like I said, invest in individual stocks, kind of out of sport more than anything, I would rather try to find a way to increase my income, meaning I would rather find a way to work a regular job, but a job that pays me as much income as I can possibly find. I mean, switching jobs, doing what you have to do to increase your earned income, but then on the side, trying to find ways to build income streams, even if this is building income streams that are not really going to produce income for many years. And that's kind of an investment in itself, right? So in my opinion, the best way to get a super high portfolio value is to build your income so you can pump more money into the market, so you can reap the rewards of compound interest with higher sums of money. And again, to earn more income, you need to basically sell a product or a service, or you're going to have to do something outside of just earning income. Like, you're going to have to start a business, or you're going to have to do something. You're going to have to identify a niche and become very efficient in that niche and analytical and figure out what works and what doesn't work. How can I make, but like, again, that's up for you to decide. Like, I can't tell you exactly what that's going to look like. What we're all trying, like, at least me, that's my goal, is to make money outside of my earned income. And that's what I'm trying to figure out myself. So anyways, I won't beat a dead horse, but that's compound interest, and that's how powerful compound interest is. And just to recap a little bit, once you get to $1 million, $1.5 million, that's when you really start seeing a significant amount of money being generated in your portfolio like a year over year basis. And the best way to increase that portfolio value is to pump more money into it. You could chase higher return on investment. Most people are just not going to be super successful doing that, and they might actually just underperform the market, to be honest. Like there's going to be a vast minority of people that are actually successful chasing individual stocks, making large sums of money, because most people just don't know what they're doing, and you don't know what you don't know, like, unfortunately. So probably your best bet is to find a way to make a significantly larger amount of money, and that's probably going to be from starting a business of some sort. So I'm Max. That's Wealthier by the Day, day 19. I don't mean to crush your dreams. You guys you got to be better than everyone else if you want to have a ton of money. That's just the way it goes. I will catch you in the next one. Please like, comment, subscribe. I appreciate all the support. These videos are trending in the right direction, I would say. So more to come once every day. And I'm kind of moving to the format where it's one video a day. So stay tuned. Sorry, one video a day addressing one particular topic. So please stay tuned. Thank you.